This is really devastating. 80 cities across the U.S. housing market this month have experienced their largest price drops in 3 years. People in California are saying listed homes have dropped by $400,000, which is equivalent to the price of an entire median single-family home in America. Should we take advantage of this opportunity to snatch up deals before large numbers of people return to the market and start competing for homes? But others are saying the bigger wave of price reductions is just beginning. Everyone shouldn't rush. Why did U.S. real estate suddenly start mass selling this month? Will home prices continue to decline in the second half of the year? Which cities' price drops are more likely to be traps? Is now the best time to snag single-family homes in California? If you're new here, my name is Richard. I come from a background in real estate development and architecture, and I'm excited to share my knowledge, experiences, and insights about the housing market with you. If you find my content helpful, please subscribe to my channel. We previously shared information about housing inventory across various U.S. regions. For example, inventory in the Northeast has always been relatively tight, but areas like the South and Southeast started seeing inventory recovery much earlier. We can categorize the reasons behind this inventory into 3 types. The regions with the most explosive inventory growth are also the areas with the steepest price drops. Looking at the chart makes this clearer. We first compiled statistics on cities with the highest inventory increases and price drop percentages, then categorized these cities by their respective states. For example, in regions with explosive inventory growth, Florida accounts for 11 of the top cities, and Texas accounts for 7 of the top cities. They're number 1 and number 2 respectively. But here's the key point. They have explosive inventory growth, but the underlying reasons are completely different. This is what you really need to grasp about your local real estate core. Let's talk about Florida first. The main reason is holding costs. For example, natural disasters force local mandatory building inspections, which costs money. Plus, insurance companies are raising premiums or even pulling out entirely, withdrawing from Florida. Homeowners can't afford to maintain their properties anymore, so they're just dumping them. As for Texas, the reason dates back to the pandemic period. Remember Musk, that super internet celebrity, moved to Texas and a wave of property speculators flooded in together. So the Texas real estate research we did before, from Dallas to Austin along that route, you just saw endless home construction. But later, when interest rates rose, some of the speculator groups withdrew from Texas. Plus, many friends who had previously flooded into Texas planning to work and settle there found that because of new company policies, what was previously promised as work-from-home flexibility was no longer allowed. Everyone had to come back. Whether there will be continued price decline adjustments later, you should focus on whether your local area will have the kind of short-term large population inflows and outflows like before. If people aren't living locally anymore, they'll continue listing properties for sale. The more listings, the slower the sales, and the harsher the correction. Next, let's look at the second category of real estate regions, undercurrent stirring. Currently, some other states also have inventory that has recovered to 2019 levels. Looking at the chart, for example, Colorado, including Denver, Springs, Boulder. North Carolina is mainly the Research Triangle area. Local folks should be very familiar with this, like Raleigh, Durham, Chapel Hill. It's not as intense or obvious as Texas and Florida. This relates to the local real estate market's population composition. So today we're actually focusing on this population and real estate analysis. For example, Colorado has a leading proportion of higher education population nationwide. Universities, institutions, employment, research enterprises, and technical white-collar groups have naturally stable employment and very substantial incomes. You can see this is quite different from Florida's local population income composition. Although I said that in recent years, Florida home buying really had a lot of all-cash purchases, it was also finance-related, but not traditional finance, all relatively high-risk, low-transparency stuff. People in the industry understand this, so their funding risk is relatively large. These people don't represent Florida's local long-term population income levels. So when encountering severe real estate market fluctuations, their risk resistance ability is naturally relatively weak. But Colorado is much more solid in this regard: permanent residents, owner occupants, high income. Moreover, Colorado hasn't had the massive speculative influx like Texas. Most of Colorado is local population owner occupation. So the population composition is basically stable. Sellers aren't rushing to sell, and buyers aren't rushing to buy. They have homes to live in. Let's look at North Carolina's Triangle area again. This has also been an area with large population influx from California and New York in recent years. One reason is that the Triangle area already has very strong technology production capabilities. But the cost of living compared to California's Bay Area, even compared to Seattle, has extremely high cost effectiveness. The level of education, healthcare, and services is excellent. So around 2022, this local area had relatively rapid population influx growth. But note, it's not like Texas with such rapid and large volume population outflow. So the Triangle area is more of a normal local market correction. It rose before. Now it's correcting. Areas like Colorado and North Carolina that are similar types, plus Washington State in the west. Have you noticed that although these regions have more houses listed, prices haven't crashed, and some places are even seeing small increases? For friends specifically wanting to buy owner-occupied homes, if you encounter properties you particularly like, you don't need to hesitate, because locally the prices can really hold firm. Next, we'll look at an even more special market category: Northern and Southern California. For one state's market, the North and South have completely different reasons for composition and population fundamentals. Because Northern and Southern California have quite different population compositions in these two regions, the real estate market analysis methods for both areas are also different. Let's talk about Northern California first. Looking at the chart, in the last episode, we mentioned California's population return flow. Among this, Northern California's influx is mainly into the Silicon Valley area. Bay Area population is mainly flowing into the South Bay section. Many of the reasons everyone knows, these big tech companies are now calling everyone back to work in the office. So people are coming back, all high income earners, local high incomes. So home prices are slowly being pushed up. But compared to Northern California, like inland Sacramento, that was also where people from the Bay Area spilled over in previous years, thinking they could work from home. Now they're being called back. So people selling homes in Sacramento are also listing to move back to the Bay Area. This is a kind of intrastate population flow internal migration within the state. So it's an internal correction period. But Southern California is different. Southern California this time is really benefiting the most from population return influx, LA and OC, with OC benefiting even more. But notice, those extremely high-priced communities in Southern California will see sluggish sales and long market times. This isn't because local people's incomes have drastically shrunk, but because the proportion of international buyers in some high-priced Southern California communities is slowly declining. The composition of buyer numbers is changing. So its price increases haven't been as high as this round of Silicon Valley population return influx, pushing up prices. High-income people in Northern California are local people, so home prices will be more resilient. So once Southern California international buyers continue to withdraw, there might be some high-priced home price corrections. Now about Southern California inland areas like Riverside, the population isn't migrating back to LA or OC because originally buyers entering the Inland Empire had the intention that old LA area houses were relatively run down and old, while the Inland Empire has all new homes that are more comfortable to live in and cheaper. So this is different from Northern California's inland area, Sacramento, where population flows back to the Bay Area. The price reduction mechanism is also different. Southern California's inland areas are purely because they rose too excessively before. When the high interest rate period began, prices started correcting because no one could afford them anymore. Interest rates are too high. So you see Northern and Southern California within one state, because of different population compositions, different high-income groups, local residence patterns, different income structures leading to different migration purposes. So you can't just say, California home prices are all falling. It depends on where you live and what your community composition is like. Pay attention to how the structure of international buyers, population, and income will change going forward.